Yeah, I'm going to now. Good morning, everybody. I'm Anya Myler, CEO of Charities Institute Ireland. I'd like to welcome you all here this morning to our joint webinar with the Wheel and the team from Revenues, Charities and Sports Exemption Unit. It's great to see the active interest of so many people in this important topic. And this is a very timely presentation, as many charities will have commenced their annual audit process for 2023, and regulatory and tax compliance will form part of any audit review. Indeed, the Charities Amendment Bill 2023, which will come back to the Dáil after Easter, will impact directly on the financial management and compliance in our sector. It contains provision for all charities with income of €250,000 or more and above to undertake an annual audit to SORB standards. And this may necessitate a review of the financial controls currently in place in organisations. Like any business, there's an expectation that charities will comply with legal tax provisions, and the charities regulator expects charity trustees to be able to explain and justify their approach to internal financial controls when there's any departure from the good practice standards that they've set out in their guidelines on their website. The Irish charitable tax exemption extends to a number of tax areas, including income tax, corporation tax, capital gains tax, etc. And I know the revenue team will go into these in more detail. And although charities themselves are not exempt from VAT, many items that relate to charitable activities are exempt. But as we all know, VAT compliance is an entire area in itself, and it has become a real issue for many charities who procure supplies or services from non-EU jurisdictions. So with that as a backdrop to our full agenda this morning, I'd like to hand over now to Mick O'Connor from Revenue, who will introduce today's webinar and the team to you. Thank you very much.
Thank you very much, Anya. You can hear me? Take it? Yeah. Okay. Look, my name, as you said, it's Mick O'Connor. I'm a principal officer in Revenue's personal division. We have responsibility for the vast majority of charities' tax compliance, including applications for the charitable tax exemption. So I'm joined here today by a number of my colleagues from the team in the charities area. Plus, I also have Martin Hunt here from our POI modernisation branch, who is available to answer questions people may have on the enhanced reporting requirements as they apply to charities. So firstly, before going into any great detail, just to say thanks to Anya and the Charities Institute and Fergal at the Wheel for the opportunity for us to make a presentation here this morning. There are a number of presentations. We'll try to get through those relatively quickly to leave some time then for some questions and answers at the end. The presentations are going to focus on the charitable donation scheme, the VAT compensation scheme. We have a presentation generally on tax compliance interventions. And the reason for that is it's just, again, that message that charities are no different than anybody else. They are within the scope of revenue compliance activities, and they are carried out within the scope of the revenues compliance codes. So just to be aware of that. We're not going to go into huge detail on it, but obviously if people have questions on it, we'd be glad to take them. We also have a very short presentation that just highlights maybe some of the historical issues around the use of the CHY number and how things have changed maybe. Maybe it's something that people might just have a think about. We'd be very interested in people in the sector and the importance that's placed on the CHY number and why people see it as being particularly relevant. So the presentation will touch on that. I mentioned we've Martin here, so he's going to assist in any questions, as I mentioned, on the enhanced reporting requirements. We circulated some details beforehand, and obviously if there's any questions, we'll try to answer them as best we can here this morning. If there's anything that we can't answer directly, we'll happy to take them away. Any specific questions, we'll be more than glad to take those and come back to people on it. It's a real opportunity, I think, in terms of, you know, looking at it from a sectoral point of view in terms of the arrangements, so that we can get any supports that we have or any FAQs and things like that updated to bring them to, you know, as good a place as possible for people in the sector to be able to rely on them. And again, as I said, if we can't directly answer them today, we're happy to take any questions and come back on those. Just one last thing I might mention in terms of compliance. Wearing my other hat, I'm the Register for the Central Register of the Beneficial Ownership of Trusts. So then just to remind people that charities are, if they have a trust arrangement, are within the scope of reporting for the central registration, the central register there. So we're not going to go into detail on that today, but it is something to be aware of. there is on our website SIRBOT, it's called, in terms of shorthand, and if people go in there, they can see what's required. And I suppose finally, just to say, given the work the charities do, I think it's very important that we all have a shared understanding here that you know, there is a real need for compliance, tax compliance. Obviously, that is what we're interested in terms of the sector, and I think that tax compliance will give us all confidence in the sector and provide trust in the sector, and I think that's something that we all share in common and that we're very happy to do. And just the last words, just to say thanks yet again to the Charities Institute and the Wheel for the ongoing engagement that we have, and hopefully it'll continue. So with that, I'll just pass you over to Therese from the team, who's going to take the first presentations.
Thanks, Mick. Good morning, everybody. My name is Therese Mooney, and I'm working in the Charities and Sports Exemptions Unit here in MENA. And I just have a couple of presentations for you here this morning, and the first one is on the charitable donations scheme. So really just a recap on the scheme, how it works, and how it's processed here in revenue. So it's a scheme which is administered by revenue on behalf of the Department of Finance, and it allows authorised charities to claim donors' own tax relief. Donation has to have a value of at least €250 in 1 year and a maximum of 1 million. Now, the donor has to agree to donate their own tax relief to the charity. So along with donation, they have the option to sign over that part of their tax relief to the charity. There's a 4-year limit for making a claim under the scheme. Okay, so the annual and enduring certificates, and these were up until very recently called the CHY3 and CHY4 forms. So we carried out a review of these forms in conjunction with Revenue Legal Services. And as a result, there are updated versions of the forms which have been produced and are now on the website. And these are the forms that should be used from now on, except obviously where there are existing enduring certificates in place. So there are no alterations permitted to the forms. We often get queries from charities about whether they can put their logo on it or further information. And the answer really is no. A charity could put its contact details, its name and phone number on the form, and that's it. The terms tax form and tax back form we hear as well shouldn't be used really by charities in referring to the certificates. They are just called the annual and enduring certificates, and I suppose they are statutory forms, so they're based on provisions in legislation, and that's why there are restrictions around how they're used. The appropriate form must be provided in full to the donor if they're choosing to donate their tax relief. So that means, I think there are 6 or 7 pages within the form, so that all of that information is relevant to the donor. So how does the charity apply to be authorised to operate the scheme? So the charity must hold charitable tax exemption. At the moment, it's for 2 years before they can apply to revenue for authorisation to operate the scheme. A charity will request a donor to sign either an annual, that's the 1-year form, or the enduring form, which is the 5-year certificate. And the charity has to retain those certificates because they need to provide a copy of the donor's signature to, if requested by revenue. So that might be part of our regular checks that we do on CDS claims coming into us. The claims are submitted on ROS, and you can manually input the details, or you can upload a CSV form. The retention of records is important so that duplicate or claims made in error don't occur. Once a claim is received, the revenue systems automatically calculate the amount of tax repayable on that date, but further repayments may issue if tax becomes available at a later stage. For instance, if an IT and income tax registered customer files a return and as a result more tax becomes available, then that may be repaid in what we call a sweepback system. So the initial payment that a charity gets when it submits a claim may not be the payment in full. So the claims may be system selected on a random basis for checking. And if that happens, revenue may contact you through my inquiries. So it's very important for us that charities are aware of that and that they check Ross for contacts in respective claims, because if they don't respond to us, there may be delay in processing the claim, or the claim may even be rejected. And that's really it on the charitable donation scheme. I suppose, and this goes for any of the other presentations, you know, the Charities and Sports Exemptions Unit has a hotline, or a telephone line for queries. We're open between 9:30 and 1:30. So that's the telephone number there, or you can always contact us using my inquiries. I'm going to stop sharing this screen, and I'm going to move on to my second presentation, which is on the VAT compensation scheme. Okay, so just a bit of background on the VAT compensation scheme. As you're probably all aware, the scheme was launched in 2018, so it's now in its 6th year. Sorry, just a bit of a lag there. Again, it's administered by Revenue on behalf of the Department of Finance. And the aim of the scheme is to reduce the burden of VAT on charities. As Anya said, charities are not automatically exempt from VAT, but they can reclaim VAT partially on the operation of their day-to-day activities using the VAT compensation scheme. So the legal basis for the VAT compensation scheme is Statutory Instrument 580 of 2018, and that was amended by 713 of 2021. So charities can make one claim per year, and that is in respect of VAT paid in the previous year. So the claims are submitted again using Ross, and that you can do that anytime between the 1st of January and the 30th of June. So the 30th of June is the cut-off date. The system just won't accept any claims out. We have no way of processing claims received after the deadline. The fund for the scheme is now capped at 10 million annually. So that's an increase on 5 million from last year, from all the previous years actually. So where the total value of the claims submitted exceeds 10 million, then the claims will be paid on a pro rata basis. So there's a minimum claim amount for a charity of €500 and a maximum claim amount of 1 million. So to submit a claim, charity must be registered with the CRA, and it must also be registered for tax for the revenue and hold charitable tax exemption. So claims received are subject to review. Revenue might request further information in respect of your claim. Again, that would be requested through my inquiries, through Ross. All requested information must be received within the deadline that's given. So we'll always give a deadline for response. VAT registered charities should ensure that they don't claim back VAT through the scheme that could otherwise be claimed. So if it could be claimed back in the usual manner, for instance, through VAT return, then it should not be submitted for the VAT compensation scheme. So there's more information available on the website under Companies and Charities VAT compensation scheme. So just in general, I suppose to say that we have noticed in the team here that the claims have improved in quality year on year, but we do have a few issues, and we find sometimes that public funding is included in claims calculations, so that's not allowed. I suppose the big problem for us is the timing of claims. So we typically get a lot of claims in the final week of the scheme. So you can see under there just a little table, percentage of claims received in the last 7 days. So we had 52% in 2018, and sorry, I'm jumping between 22. It was 50%. So to date, as of today, we have 49 claims in for 2024. So where are we now? The end of March. So not very many. So if you're ready to submit your claim, please do. So there's just some statistics, the number of claims received year on year, and the total of the amount claimed. So it's kind of, I suppose, down to 36 million last year, and I suppose we're waiting to see what will happen this year with the increase to 10 million for the total funds of the scheme. Again, just our inquiries information, our contact information there. And that is the end of my presentation. I'll just stop sharing screen now. Just hand you over to Teresa Harty, who is going to talk to you about charities and reference numbers.
Well, good morning, everyone. Teresa Harty is my name. I work with Mick and Therese in the Charities and Sports Exemptions Unit. And Therese obviously has just spoken to you there about the two claim schemes that Revenue administers on behalf of the Department of Finance in relation to charities. And in between that, to follow that, we just want to have a quick presentation here on charities and reference numbers. And you're probably all very familiar with the reference number that are used in the charity sector, and in particular the CHY, as Nick referenced earlier. And we're just interested generally and in your thoughts on the emphasis that is kept on the CHY number. So I'm just going to run through a few of the reference number that you'll all be familiar with. So first one we're going to look at is the registered charity number. This is a really important number in the charity sector, as you all know, because charities in Ireland are required to be registered with the charities regulator. And this registered charity number is issued to charities once they have been registered by the charities regulator. And that means they're on the register of charities, which is administered again by the Charities Regulatory Authority. And it's the reference, it just indicates that a charity has charitable status and is permitted to operate as a charity in Ireland. So that's a really important one. Next one, equally important from a revenue perspective, is a tax registration number. So this is issued by Revenue for an organisation, and it's similar to an individual's PPSN. It has that importance. And any charity looking for tax exemption must have a TRN. So you can't apply to our unit for tax exemption unless you have a tax registration number and you've already applied and been issued with one for either income tax or corporation tax. And in all your dealings with Revenue, as is the same across the board for all Revenue customers, the TRN is the reference that you must use and the charity should use and all businesses should use when they're dealing with Revenue. So, you know, if you're making a phone call or you're talking to us even about your charity affairs, we'd love to hear you reference the TRN for us. I mean, that's first and foremost from a Revenue perspective. The charitable tax exemption number, that's known as the CHY, and you'll all be very familiar with this. And this has a lot of emphasis on it across the board for the public and for charities. We've noticed this, and we're kind of going back to a time here before the establishment of the charities regulator, and that was in 2014. Just want to talk about that for a little bit first. Before the establishment of the charities regulator, there was no particular reference that denoted that a charity had charitable status. This CHY denoted charitable tax exemption. And because there was no charities regulator then, this CHY became very synonymous with charities. And it was an official recognition that the entity was a charity. So I can see where the emphasis was, and it's still very much emphasised, I think, and we noticed that in our unit here, in our dealings with charities. And the CHY reference is issued by Revenue and still is in respect of charitable tax exemption, but it became a kind of default identifier for charities in the public. So, and you'll probably be familiar with this as well, but just to emphasize here that the CHY reference refers only to tax exempt status. It's a status on a given day that a charity has been granted by Revenue. They've applied for the tax exemption. We've looked at the information that we need, we've analysed it, and we've granted tax exemption. And they've been given a CHY reference. That indicates you have tax exempt status. It doesn't mean that a charity is tax compliant. And as you probably know, a tax clearance certificate is what will indicate tax compliance for a charity and for any of Revenue's customers. So just as I mentioned there, the tax clearance certificate. So in order to, you're probably familiar with how to obtain a tax clearance certificate should you need one. Obviously, you have to be tax compliant in order to be considered for one, but it's where appropriate, it can be obtained through Revenue's online service through Ross. And you're probably mostly familiar with that. Anyone who isn't registered for Ross, we would be urging them to do so. And we do encourage in our everyday dealings with charities for them to register for us. It's our online secure facility for our dealings with our customers. So in order to apply for your tax clearance certificate, a tax registration number, is your TRN, obviously is required first and foremost. And this information on how to apply for it there is the link is there and it's included for anyone that wants to log in there. And any questions, of course, we can help you find the right area if you have any questions on applying for your tax clearance certificate. And just a quick summary on Revenue's online service. As I said, it's a secure online facility for contact customers. Our unit will always use Ross to communicate with our charities. And I think one charity should be registered for Ross, but also for My Inquiries, because that's where our messages will be going to, like Charities mentioned there, for say for the charity donation scheme. When we're looking for backup information or we're looking to validate a claim, we write to charities through My Inquiries. Unfortunately, we don't always get responses from charities that way. And a few weeks later, we're looking and saying, well, nobody's responded to our request, for backup information. And as Trey says, the claim could be rejected or it'll certainly be delayed. And then possibly a charity might ring asking why there is a delay when they've already received something and maybe haven't noticed it in their inbox. So we do urge everybody to check their inboxes and to be registered for My Inquiries for all their dealings with Revenue, obviously not just in the charity sector, but that's where you will find the correspondence from Revenue, and through there we can communicate with you. So any charities that were registered for us prior to 2023 mightn't be automatically registered for My Inquiries. So that's just something maybe to bear in mind. From 2023, there's an automatic registration for My Inquiries once you register for us, but prior to that wasn't available. But so just to check that maybe that you are actually registered for My Inquiries. And the charity's Ross administrator can register for My Inquiries within the admin tab on Ross. But any questions at all you have on that, we're happy to take them. We know we can point you in the right direction if you do have anything that you wanted to ask on that. Yeah, that's the end of my presentation really, and it's just really to ask everybody to think about the use of the CHY reference. It doesn't hold, I suppose, the same importance as it had prior to the charities regulator being established. The TRN obviously is what we'd like to see more use of within charities, and the RCN then in respect of the charitable status of the charity. Thanks very much.
Thanks, Teresa. We just have one final presentation, and that would be from my colleague Paul Sheridan. I'll just share my screen.
Morning, everybody. My name is Paul Sheridan, and I work with Teresa and Trey's on the compliance side of the unit's activities. So, okay, so I suppose the first point to note is that all compliance activities for charities is carried out in accordance with the Revenue Code of Practice for compliance interventions. This is a fairly detailed document, and there's a link to it at the end of the presentation. But I suppose first thing to know for charities is there are 3 levels of compliance interventions. The level 1 is usually for something small, like reminder of outstanding returns or a request for self-review. Level 2 then concentrates on what are known as risk reviews. So these will be looking at a particular risk that has been identified, or it also includes a revenue audit. Now, the revenue audit covers the full range of tax activity. Level 3 then is for investigation of high risk practices. So for the majority of charities, like our intervention will either be a level 1 or level 2 intervention. But why would we pick a charity for audit, or what are we looking at? It's an overall review of all taxes. It can either be desk or field based, and we will give you a 28-day notice. So you get a letter out to say that a revenue audit is taking place. It'll probably focus in on the PREM if you're registered for that, or the CDS or VCS, or probably in most cases all 3, and we'll also be looking at some other factors. The Code of Practice also has provision for disclosures, and charities can avail of disclosure regime. So when you get your audit letter and you're preparing for that, if you discover something that you think is, may meet the disclosure, you should make contact with us as soon as possible. We recognize that you may not have the, expertise to deal with a disclosure completely, but you can also always get your agents, if you have one, to help you with that. And what makes for a disclosure is, well, it must be a disclosure of complete information. So if you identify an issue, it has to be complete information. You will be required to make a declaration, and there must be a payment of tax and interest in order to meet the requirements. And there are 2 types of disclosures. There's an unprompted and prompted, and both have different conditions and criteria and impact on amounts to be paid and publication, etc. So a lot of that is covered in a lot more detail in the Code of Practice. And while I wouldn't suggest you take it home as bedtime reading, it is worth having a read through it after this if you want to get more detail. So then, if you are coming out to do an image, what are we looking at? I suppose for a lot of charities, the main area of concern would be on PREM, or payroll and real-time reporting. So our systems generate, we can see payroll submissions and warnings that come up as a result of that. So things like use of out-of-date revenue payroll notifications, using the wrong pay for calculation of USC. These are just some of the areas that can crop up. We would also be looking at, obviously, statutory deductions, so that the IT or PYE, PRSI and USC are correct. And for any intervention that we would do, if you have employees, that we would be doing a sampling of those to ensure that calculations are correct. Travel and subsistence is an area that we look at because there is room for a lot of error in this. The civil service rates are available. So if you're going to apply to civil service, you should use the civil service rates, not a variation on the same. And we have noticed this on some of our interventions. Also, the thing to bear in mind is that travel and sub is only payable from your work location to the destination and return. If you're not using the civil service rates, this should all be vouched. And if you can't produce the receipts for this claim, but then it shouldn't have been paid in the first place. And we also require that receipts and records will be kept for all claims, and that it's evidence of the trade, that the expenditure was actually incurred. And again, there is a link to that at the end of the show if you want to look at it in more detail. Another area that we kind of look at as well is benefit in kind. So, you know, do your employees have a motor vehicle for their sole use? Are you paying their health insurance? Is this being declared? Like, this is not to suggest that this is what's happening in every single charity and in every employee case, but it's just general factors to bear in mind. And then there are other reporting requirements, like there's the 46G process for any payments over 6,000 to service providers. In general, a lot of charities are not actually reporting these payments. We find when we go up into them, but there is a link to the requirements and how to go about doing that. Part of the problem can be because even though you're registered for CT or IT and you're not making returns, it can be a bit difficult to find out to do it, but that's why I've included the link. And also, I suppose, going forward, we will be having a look at the ERR. Now, I'll leave Martin to deal with that in more detail in the next presentation. So apart from the PREM and the tax aid restorations, we'd also look at accounts when we're doing an intervention. And I suppose, firstly, it's just general expenditure. And if we see what we would consider to be unusual expenditure. So like if a charity is set up for a particular purpose and for instance charity is set up for the relief of poverty or whatever, and then seems to be spending a lot of money on. This is just a wild example, like horse riding. It does raise a question. How is this sort of meeting the aims of the charity? And we would also do a stamping of invoices. So obviously, if you're paying for expenditure, you need to keep your invoices to show that you paid them. The misclassification of your employees, we can see regular payments in an account to a person that are not on the payroll. It may cause us to ask you to look at, your procedures in relation to this. Are they actually an employee? And I suppose there's a whole area of consideration in whether they're an employee or self-employed. And again, the manuals give you more detail on that. We also get the area of accumulation of funds. Now, approval is actually supposed to be sought from revenue if you intend to accumulate funds for a period of time. Like, we are pragmatic in that we recognize that there may be need for a prudent reserve, but if we see large sums of money just sort of what appear to be just piling up and not being put to charitable purposes for which the charity has the exemption or which it was established, this causes us to raise some questions. If you have a plausible and reasonable explanation, revenue will be plausible and reasonable and accept that as well. Just on the turn in audited accounts, traditionally charities over 100,000 had to have audited accounts. This threshold has been increased to 150,000, and that will be our kind of baseline figure going forward. That it would be, if you have a turnover of over 250,000, you must have, audited accounts, and we would be looking at obviously the auditor's report then, and if they raise any concerns or observations that they have made, we might have to ask as well the same questions or for more detail. And then I suppose the third area of any of our compliance interventions will be focusing on the charities claim schemes that Trey spoke about earlier. So if we're looking at your operation of the charitable donation scheme, we would be looking for sample certificates, and these will be different to any ones that you might have previously been asked to produce as part of a claim or that. So I suppose I'm reiterating what Trace was saying, that it's important that you keep the certificates for the required time. And also just your general records in terms of how you operate the charitable donation scheme. Can we follow the trail? Basically is what we're looking at there. when the team are looking at claims and if there are issues arising, this may be actually a trigger for us to kind of look at the charity in more detail, because I suppose if there are, large problems arising in terms of claim submission, and that it just poses the question, are there any other risks in how the charity is operating? So as you can see, everything feeds into everything when you're looking at a charity, and we kind of look at it in the round. And again, just on the charity's back compensation scheme, it's the same, like, are your records correct? Did they back up what you submitted, and claim calculation? So there's the various things I've included there to the code of practice and to your reporting obligations, and also the travelings of lots of light reading there. That's the end of my presentation. Thank you very much.
We'll just bring it back to you now, Anya, if that's okay from revenue side.
Thanks. Excuse me. Thank you very much, Teresa. The recording is going to stop now, but we'll jump into the Q&A just to thank